Small caps have had a rough ride. They have been hit the hardest across all categories of mutual funds with over 17% negative returns year to date on an average. All the 29 funds are in the negative zone, means you actually lost money by investing in them. So given all the chaos in the stock market, we decided to look at some of the popular and huge funds managing massive wealth of investors which have also been consistently good performers in their respective categories. In today's video, we'll look at one such fund, SBI Small Cap Fund, the third largest fund in the small cap space, managing over 31,000 crore worth of assets. Hello and welcome to our channel 5 Minute Finance by ET Money, where we discuss the basics of investing and personal finance. In this video, we'll break down SBI Small Cap Fund's performance, risk management and strategy to help you figure out where this fund stands amid the current unfavorable markets. Watch this crisp video till end as it will help you decide whether SBI Small Cap Fund suits your portfolio or not. So first things first, let's look at how successful this fund has been in managing the market corrections. With a one-year return of minus 1.1%, SBI Small Cap Fund has fallen but less than the Nifty Small Cap 250 index. That is in the recent short term. But does it have what it takes to weather tough markets in the long term? Look at your screens. It shows how SBI Small Cap Fund has consistently outperformed the Nifty Small Cap 250 during market downturns, limiting losses in most corrections. Whether it was steep decline in 2018, 2019 or even the COVID crash in 2020, the fund managed to cushion losses better than the broader small cap index. Now, a key factor behind this stability is its seasoned management. Launched in September 2009, the fund has now completed 16 years, and for the past 12 years since November 2013, R. Srinivasan has led the fund. His stock selection and risk management strategies have helped the fund navigate tough market phases. In some instances, like June 2015 and September 2019, the fund delivered positive returns while the index was in the red. This suggests strong stock selection and risk management. The only real slip-up came in December 2024 when the fund underperformed the index, falling slightly more than the benchmark. But overall, its track record shows that it has been a more stable choice in volatile markets. Now pay attention to this. When I say the fund has performed better than the index or has contained the fall in markets better than its benchmark, remember, here we are looking at a small cap fund. We are comparing this fund to a small cap index. So new investors, don't mistake it to be a low risk fund to invest. The underlying risk of investing in small caps remains there. Only those who understand the risk of investing in a fund that invests in smaller companies may go ahead to invest in small cap funds for a long term of more than 7 years. These funds are not suitable for new investors who do not understand the risks involved. Coming back. So let's now see how the outperformance in terms of managing downfalls better than the index reflects in its returns. Look at your screens. It shows trailing returns, means point-to-point returns. So like 1 year return means return comparison between 2 points, March 1, 2024 and March 1, 2025. So over the midterm, 5-year CAGR was 22.58%. The fund has underperformed both the benchmark and the category average. But when we look at the long-term picture, the story changes. The fund's 10-year CAGR stands at 18.78%, significantly outperforming both the benchmark and the category average. This means investors who stayed invested for the long haul have been well rewarded. Now, one drawback with trailing returns is that it considers a particular time period and reflects the impact of current markets in the returns. So if the markets are performing well, the trailing returns will look exciting and vice versa. This is where rolling returns come into the picture. Rolling returns is like calculating trailing returns, assuming you are investing on a daily basis, or you can say it is like a daily SIP for a certain interval and then taking an average of the series of returns. Now to know more about rolling returns, refer to our other video. The link is in the description. Now look at your screen. Over the last 10 years, if you look at any 7-year period that existed in the last decade, the fund has delivered an impressive 21.07% average returns. This is not just a lucky stretch. It reflects a strong track record of long-term consistency. Compared to the category average of 18.54%, SBI Small Cap Fund has performed noticeably better. And when stacked against the Nifty Small Cap 250, the outperformance becomes even clearer. So what has driven these stellar long-term returns? Let's zoom in to understand the fund's winning investment strategy. Small cap funds are expected to focus on small stocks, but fund managers tweak allocations based on market conditions. By regulation, they must invest at least 65% in small caps, while remaining can go into mid, large, small, or debt. SBI Small Cap Fund, however, has taken a distinct approach compared to its category peers. On your screen is how the fund has changed its asset allocation over the years. It has zero exposure to large caps over the last 5 years, while the category average had 5 to 8% allocation. This shows the fund's commitment to smaller, high-growth companies. Its mid-cap exposure has fluctuated. In 2021-2022, it had 15 to 22% in mid-caps,
Slightly increasing small cap exposure.
but by 2023-25, it became even more aggressive, raising its small cap exposure to 81.23% versus the category's 73.5%. Now, by avoiding large caps and actively managing mid-cap exposure, SBI Small Cap Fund has positioned itself as a high-risk, high-reward player in the small cap space, a strategy that may offer high returns and, of course, greater volatility. Now, to understand the investment style better, let's see how the fund's top holdings have changed over the years. Over the last 5 years, the number of stocks in the SBI Small Cap Fund's portfolio has grown from 47 to 61, indicating a shift towards broader diversification. While it isn't overly concentrated, the fund still maintains a focused approach, ensuring quality over sheer quantity. While the top holdings have changed over the years, it suggests moderate churn rather than a completely buy and hold strategy. Some stocks like Blue Star and Kalpataru Projects International have stayed in the top holdings for years, while others have seen reduced allocations or exited. Having said that, no single stock dominates the portfolio. The highest allocation was around 5% in earlier years, and currently even the top holdings are under 3%. So this was some basic analysis about SBI Small Cap Fund for new investors. The whole idea of this video was to give you enough information to get to know the SBI Small Cap Fund better and decide for yourself if this fund is suitable for you or not. Drop any queries in the comment section. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.